So Securities Trust of Scotland's investment objective is to produce a high level of income, but also a growing dividend stream to our shareholders, as well as some capital growth over the long term. We've changed the makeup of the fund quite a bit over the last year, but we're looking for consistent dividend growth, which hopefully will be in line with inflation to protect our clients' real disposable income, if you like, when they're drawing on it in retirement. And hopefully the capital growth will build the asset base for our clients as a solution over the long term. So we changed the benchmark in June 2016 really to widen the remit of the fund so that we could invest truly globally. Prior to that, actually, the board had instituted the MSCI High Dividend Yield Index as the benchmark for the trust. We felt that was quite constrained. It's only around about 300 companies, but also we felt that it had quite high turnover. So if we took away that benchmark, it would mean that we wouldn't have to track an index, if you like, and look globally for all sorts of different types of companies to really allow us the best chance of meeting the investment objectives. And that's really worked well over the last year and has allowed us to take a lot more risk, if you like, in areas that are targeted. So smaller cap, for example, in terms of the market cap average size of the portfolio, but also allowed us to invest in more growthy areas of the market to really underpin and produce a sustainable dividend growth for the product over the long term. So we've changed the investment process a little bit for the product. It's really all been about evolution rather than sort of revolution, if you like. What we've tried to do is make the portfolio a lot more robust by making sure that the investment processes that we use come together as an investment system, if you like. We really want to be able to make sure that we use if you like, lots of different processes to make it much more robust. So we brought in credit analysis. We've also brought in stress testing of all of the companies that we invest in through the business cycle to make sure that we really are investing in those companies we believe that will be able to pay a sustainable dividend even through a more difficult operating environment. We've also got a great team, which I think does give us an edge against the competition. Quite a lot of equity income products work as part of a wider global equity remit. We have 7 of us actually roaming the globe for the best investment ideas that we can find. I think it all comes together to give us a more institutionalized portfolio and hopefully more consistent capital growth, but also sustainable dividend growth over the long term. Well, I'm pleased to say that the investment performance of the portfolio has been quite strong since I became the lead manager in May 2016. We've put together a benchmark with the board, which has been very supportive over the last 12 months, to really try to beat the peer group of other funds doing a similar type of thing. So we've opened that up not just to closed-ended funds, but also to the open-ended arena, if you like. So using a blend of around about 100 different funds out there, we have come in near the top quartile over the last year. And we've also produced a very nice equity return, capital growth, if you like, that's better than the wider market over the last 12 months. So I'm very pleased with the performance. Hopefully we can continue to put together really strong returns for shareholders in the future. We're finding some great investment opportunities, and certainly some different ones to perhaps the Trust was finding a year ago. One of the things we've actually done is take a little bit of money out of the US, where we see actually valuations are quite expensive. What we've also done is put more money to work in technology stocks over the last year, and that's really to give more growth potential to the portfolio. So we've seen ourselves buying some large cap tech, which has performed very, very nicely and helped drive strong returns for the Trust. We see opportunity in Europe, and we've certainly been increasing our weightings to Europe over the last few months, and we're certainly seeing better valuations there with more prospects, I think, for capital growth. And we're getting very, very good dividend growth from some of the emerging market stocks that we've also been buying over the last year. So lots of potential, and I think hopefully we'll see some very good dividend returns coming through, which we've been seeing over the course of the last sort of 6 to 12 months. So the Trust dividend policy really is to produce a sustainable yield, but also a high level of yield, but also grow that over the long term. And the board is very is very keen to make sure that we try to pay a growing dividend stream to shareholders so that it actually protects them in terms of the real value of the dividend or real value of money. So we've been putting through dividend increases. The board actually for the fiscal year 2016 put through an 18% increase in the dividend, and just recently at the end of June they approved another 2.6% return in terms of growth of the dividend again. So very much a long-term goal to produce that rising dividend stream and inflation protection.